Hello guys. Thank you for coming. This is the first time we've done a first-time homebuyer seminar, so we're testing it out. Please give us some feedback and ask a lot of questions, whatever you have, as we go along. There is a lot to know, and in no way, shape, or form do I expect that I will cover it all tonight. But if you would like to sit down, I'll take you coffee. We can talk about it a little bit more. So my name's Katie. I am a buyer's agent with the Steller Group. This is Ryan. He's our showing assistant. Abby is another buyer's agent, and Bill is our Yoda, the leader of our buyer team. And then with MCS Mortgage here we have Brandon, and so when we get into some of the mortgage stuff, he's going to hop in because we joke in real estate that we know a little about a lot, but I know about this many things when it comes to mortgage. So.
Me too.
All right, let me see who we can get here. Okay, so a lot of the questions people ask when they're starting out: how do you choose an agent and how do you choose a lender? There's a lot of websites out there with interview questions that you can ask to find these people. You've already found some great people, so good job. There are a lot of questions you can ask, though. Is someone full-time or part-time? Do they work on a team? We obviously do. Really, it's up to you. There are certainly questions I don't think are indicative of someone's talent and their quality and the job they're going to do for you, such as how long they've been doing the job or how many transactions have they closed. I'm more interested in, have you missed any deadlines? Do you communicate? Are you going to get back to me in a timely manner? Are you going to listen to me and what I want, or are you going to try and sell me the house that you want to sell me? Some of those things are good, others are not so good. Like I said, you want someone who's going to answer your questions thoroughly and certainly make sure that you're not being condescended to. This can be a very easy process. It can also be a very stressful one. So it depends on the team that you put together for yourself. In Denver's market, you're obviously going to need a little bit of patience. What have y'all heard about the market here?
That as soon as it goes up, it comes down.
Yeah. And certainly for good homes, that's true. And certainly within a certain price range, that's true. So we are trained and we put a lot of time and effort into making sure that your offer is competitive, and we're doing everything we can to make sure that your offer is the one accepted. But you are going to need to have some patience. When I bought my place, we did, 13 offers?
At least.
I drank a lot of wine that year. And
It's not because your offers weren't good.
Right.
It just was, we were up against so many people.
Yep. And somehow people just have like $400,000 in cash laying around. We're going to need to figure that out. Yeah. And certainly talk to your friends and family. See what they think. See what kind of experience they've had, what they think are things you should be looking for. Your friends and family know you best. Questions on any of this? And this goes certainly for a real estate agent or a mortgage lender. Both of them, I mean, it's a similar process. These people are getting to know you. I always joke that on any given day, I am a realtor, an interior designer, a marriage counselor, a home inspector, a babysitter, a dog watcher. Anything else?
Oh, there's more, but we don't have time.
Oh, that's fair. That's fair. So the home buying process, there are certainly more bullet points than this, but to sum it up, you're going to start with meeting an agent and walking through what are your must-haves, get to know each other a little bit because you are going to be spending a lot of time together. You're going to do your financial pre-approval. Brandon, I'm going to ask you to step in for a second here and talk to us about the difference between a pre-approval and pre-qualification.
Okay, so what you want is a pre-approval. A pre-approval is something that you've already submitted all of your documents and it's been underwritten and it's been approved by the lender to be able to fund it. A pre-qualification is more of a kind of an overview of what you credit score, your income, what you can qualify for, meaning that theoretically, you can pre-qualify for just about anything. And then when the time comes to get approved, things could change. A pre-approval is you've already gotten the loan approved. All you're waiting for is the collateral. Which collateral is the house, the appraisal. So that's what they come in. They come in. They have to find the house, and then when you find the house, you submit the appraisal, and that's the last step of getting the loan closed. So pre-approval is definitely a better way of going about buying a house versus a pre-qualification. A lot of people who say, "Oh, we'll pre-qual you in 10 minutes," it's kind of nonsense. I mean, anybody can pre-qual, but to get a pre-approval, you actually have to go through it right. And that's definitely. I know that they probably prefer that 5 times over a pre-qual. So that's the difference. So pre-approval is basically going through the whole loan process before you find a house.
Thank you. Next, your agent is going to, we use the MLS, which is the multiple listing service. It is the most accurate service in anywhere, really. Zillow, Realtor.com, Trulia, Redfin. Is Redfish a thing? That's not a thing. I'm just making stuff up now. They're great. They have nice apps, but they do not update in real time the way the MLS does. There are also portals in there where you can communicate with your agent. So that is something that you'll want to be set up on. It's really fun to poke around in there. You can, see what you can get in different parts of the city. You can also say, for pretend, if I had $5 million to spend on a house, what would I want that to look like? Not that I've ever done that. And then when something comes on the market that you think fits your budget and your criteria and the area you want to be in, you simply call your agent, let them know that you'd like to set up a showing. And that is an important piece. That is what your agent is for. You don't need to communicate with another agent on Zillow or the listing agent. Certainly, your agent is there for you. One of the benefits of a team, and certainly our team, is if Abby, Bill, or myself are tied up with another client, have a kid's soccer game, are out of town, are sick. Ryan is our showing agent, and he exists solely for the purpose of getting someone in the door immediately when something comes on the market, because as you identified, things move quickly. And there have definitely been times, I think, for all of us where really our client has benefited because we're the first one in the door. We make a decision right then and there. The offer's in, an hour after it goes on the market, and it's all tied up. Not naming any names, but it's happened.
And that's where pre-approval comes in, because if you submit an offer with pre-approval, they're more likely to accept it than with the pre-qual, because they need to wait the full 30 to 45 days, whatever it may be, to close the loan.
And certainly, I think in all of our opinion, there's truly no point in going to see homes until you are pre-approved. Simply because inevitably you are going to find something you love, you are going to want to put in an offer, and in this market in Denver, you just don't put in an offer unless you have that pre-approval from a lender. So next comes the offer, the fun / really nerve-wracking part. Are they going to accept it? Sometimes they will, sometimes they won't. Sometimes you'll write 27 offers and you'll get frustrated, and that's where we become mental health counselor as well. But it's, sorry.
How long does it usually take them to accept or reject an offer?
That's a great question. There is a part in the contract where we ask very specifically for an acceptance deadline of generally 24 hours after the offer is submitted. There are certainly times, especially in this market, and especially if a home goes on the market, where the listing agent and the seller know that it's going to be a hot commodity and that people are really going to be clamoring for it, that they'll say, we're not going to accept any offers until 3 days later at this time, because they know they want to get a lot of them in, and part of what they're trying to do is drive up that price. Do not let that discourage you, because what we say is the highest and best offer is what goes under contract, is what's accepted. It's not always the highest. Sometimes it's, in your position, you don't have to sell. So you're going to be a non-contingent offer. You don't have to sell in order to buy. That's attractive to people. Your loan, if you have a conventional loan, that's more attractive than an FHA or a VA loan. If you've got cash lying around, that's a no-brainer for someone. I was like, yes, I do. So things like that. And those are things that we would talk about to tailor your offer to make sense and be the most attractive to the seller. It's not always the highest. Usually it is, but it doesn't always have to be. So don't let the fact that there are 16 offers ever discourage you. Because sometimes you really do just have to rip off the Band-Aid and just get those in and be like, I tried. I know I tried. So after a home goes under contract, you've got about 3 days to get in your earnest money. Do you guys know what earnest money is? Okay, I'm going to tell you. Earnest money is basically good faith. I want this home enough that I'm going to essentially put a pre-down payment. Earnest money is generally 1% to 2% of the price of the home. It is a check that is cashed and held by the title company. It also goes towards your down payment at closing. So it's not like additional $5,000 that you're just putting out there. Your inspection happens within a week, ideally, and we're going to talk more about that in just a second. Maybe. There we go. So the next step is we look at contract contingencies, and these are things like the home inspection. Is there an HOA for the community? Do we need to come over those HOA documents? We're going to review the title commitment. The title commitment is looking at the history of the home, basically, and making sure everything checks out, that there are no liens on the property, that its title is being conveyed to you free and clear, so that there's never going to be a problem with you being the person who owns that home. And then, as Brandon mentioned, appraisal. Appraisal happens by a certified appraiser, and that is ordered by the lender in order to keep the bank safe. However, you still have to pay for it. Yay. And so basically, let's say you're under contract for a $300,000 home, and the appraisal comes in and they say, well, this home is actually only worth $295,000. What do? That's where you negotiate. Ideally, the seller will come down to $295,000 because really that's all the bank is going to loan you, is what it appraises for. Or, if you want to make your offer even more attractive, you can guarantee appraisal. And what that means is, let's say that does come in at $295,000, you're going to guarantee that you're going to pay that $300,000 no matter what, and you have that cash to bring to closing. That sweetens the deal if you have the liquidity to do it. Does that make sense? Okay. Next, you facilitate the mortgage. You and your lender are going to submit all of the required documents to put it into underwriting. Underwriting is?
Underwriting is basically the assessment of your ability to repay. So it's called ATR, really is really the main driver of mortgage underwriting. So ability to repay basically says this new mortgage payment with the homeowner's insurance, the taxes, the HOA rather, maybe mortgage insurance if you have it, combined with your current debts that you pay, your credit card, your card, blah, blah, blah. Those are a certain percentage of your total income to make it affordable. Typically it's under 40%, it can go up to 45%, some cases go up to 50%, but for the most part, that's how they underwrite it. And they, they also assess, and I'm not an underwriter, so don't get me wrong, but I know a few. They also assess your income, your type of income, your likelihood of staying on your job, just basically your ability to buy the house from a financial perspective. The house itself, unless it's some kind of weird, mobile home on wheels, it's not going to be really an issue. They're not going to assess the quality of the house. They're just assessing the ability to repay. So you'll have to have tax returns and bank statements showing where you're getting the down payment from, and your last pay stubs and W-2s and things like that you can verify your income and show and prove that you can pay. It can be a tedious process, but once you get past providing all that stuff, it should go pretty quickly. And it usually does.
Yeah. I always tell people that the mortgage process is the most invasive part of buying a home. They really do dig through all of your finances. And I remember when we were doing it, 2 days would go by and they'd ask for a bank statement again. I'm like, I just gave you one 2 days ago. I bought a cup of coffee, leave me alone. But you really just do have to recognize that that's what happens, and they're just making sure that we don't get into another 2008 crisis.
And a lot of times they do that because, you could put a contract in on the 24th of a month. You submit everything by the end of the month, and then on the 1st or 2nd of the next month, the underwriter picks the file up, and now it's the next month. So now you have to provide, because the 24th, you're not going to have statements from that month. But on the 2nd, you will have statements from that month, so you have to provide updated statements. So a lot of times it's just updated documentation. It can be pain in the butt, I get it. Believe me, I deal with it every day. But at the same time, it's a requirement by law that they have updated.
Yeah.
And I will say, don't hide anything, because they'll find you, and they'll just delay things.
Yep.
Be as honest as possible.
Yep.
So in the little
Get going.
stapled sheet, you'll see that there is, if you turn the page, a list of do's and don'ts, and those refer strictly to the lending process. And you can see in there that if you even have the teeniest little change with something, you'll want to disclose it to the lender.
But here's the biggest thing. If you apply for a mortgage, don't go out and get another credit card. Don't go make a big purchase of credit. Don't do anything that's going to affect your credit until after the mortgage is done. So if you had plans of, you have a credit card that has a $2,000 balance and you're at $500, you're going to go buy a new TV for $1,300, don't do it till you sell the house. Because when you increase your credit limit or your credit balance on these credit cards, it'll drop your score. And if you're anywhere near a borderline number, it'll affect your rate and it'll affect your ability to loan. So once you go under contract for a house, don't buy anything. Don't buy a car, don't do any purchase on credit cards, don't do anything. Just wait till it's over. Because all those things affect your credit score. And as your credit score is affected, if you go from a 680 to 640, that affects your rate. And it affects your monthly payment, and it's a 30-year commitment. So you have to be very careful to make sure you maintain where you are, where you got approved, and not change it. It's important.
So if you go in and you see that you need to strengthen those things, is there a process in which you would say this is what you need to do?
Yeah, so
to fix
typically,
this?
for a lot of people, it's credit cards, right?
Yeah.
A lot of people are maxed out on credit cards. So the way that you get really easy points on credit is to pay your credit cards down. Don't pay them off, because you still want to show some credit usage.
Yeah.
So a lot of times, for some reason, the number is 25 to 30% of usage. So if you have a $1,000 credit limit on a credit card, you want to keep your balance at $300. Buy gas, do whatever, and just make that monthly payment. So then you have the payment history and the proof of being able to pay that back, but you also have credit usage. So don't ever, if someone ever tells you, oh, your credit card is $1,500, pay it off, don't do it. Pay it down to $200, pay it down to $300, so you still show usage and you still continue to make payments on it. And that will shoot your score up very quickly. And then like collections stuff, even collections, don't pay them off because it just reactivates your credit cards. It just leave it. Damage is already done by collection, just leave it on there, don't pay it off. So just little things like that.
What about raising your credit limit? I know, like Chase will always email you saying you can raise it $2,000. So like I did it probably the last 6 months.
That doesn't hurt. As long
And
as
so-
as long as you don't use
Yeah.
it. It'll actually help in some cases.
Okay.
Depending on what your balance of your credit is. So if you're 10,000, they bounce up to 12,000, and you have $4,000 on it, it's going to help you. If you're at 4,000 balance and it's at 5, they bump you to 7, they'll help you a little bit, not a lot.
Okay.
That's just them basically getting more money from you.
Yeah.
But it just depends on the balance compared to the limit.
Awesome. So after the underwriting step, the day before, to the couple days before, but generally the day before you close on the home, you're going to want to do a final walkthrough. The purpose of the final walkthrough is just to verify the condition of the home, make sure that the sellers are actually moving out, and also to look at any inspection items that were supposed to be completed. So typically the seller will provide receipts to you. So if you ask them to do 4 things, you'll want proof that those 4 things were done, and you'll check them at that walkthrough. If not, that's when your agent gets on the phone, lays down the hammer. Right, Abby?
Yes.
Yeah.
You know exactly how to do that.
Hashtag lay down the hammer.
Yeah.
And then finally closing. This is what you've all been waiting for. This is where all the documents get signed. You get your pen hand ready. Sign your life away. All the funds are sent to title, and with the transfer of the deed, the home becomes yours. Yes, Bill.
What is a good estimate for amount for closing costs?
Generally up to 3% of the cost of the home. Price of the home, same thing. Closing
On top of
costs,
that payment.
yes, on top of the down payment. Closing costs, and we're going to walk through a little bit later who pays for what throughout the transaction. It is said, and it is true, that the buyer and seller split closing costs. That is not 50-50. Closing costs for the buyer are typically significantly more than for the seller because of what they cover. Now, there is something called a closing services fee, and that basically just pays people to get the paperwork and everything done for closing, and that is typically split between buyer and seller. And that's also another opportunity that if you're, you have a little more liquidity and you want to sweeten the offer, you can say, I as the buyer will pay the entirety of that fee. Does that answer your question, Bill? Earlier today he says, I'm going to ask all the hard questions. So the home inspection, like I said, this happens generally within a week of going under contract. When you do this, what you're looking for, we have inspectors that we recommend, or you can use someone on your own. Inspection in this housing market is generally what kills a deal, because buyers do feel that pressure to go under contract real quick. Walking into a house saying, we want it, we're going to be the first ones in, and they don't notice that it's basically falling apart. So with a trained eye and a trained agent, they'll be able to see some of these things and point them out while you're touring the home. Make sure that it's something you feel like you can handle. However, this is what the inspection's for, right? I'm not going to tell you what the foundation looks like. I'm not going to get up on the roof. I might be able to tell you how old the furnace is if it says it right on the front. Other than that, I don't know. So after that inspection, you turn in what's called an inspection objection. These are the things I object to. These are the things I want you to repair or replace in the home. What you're looking for is things that are health and safety related. Typically what we see is the roof, radon, HVAC systems, sewer. Is something literally falling down? Is siding a little smushy because it's got water damage on it? What we're not looking for are cosmetic things or anything that's code related. The reason we don't look for anything that's code related is because some homes were built 50 years ago. Of course they're not up to today's code standards, and it's not realistic to ask a seller to keep their home consistently updated to today's code. Does that make sense?
What are some of the codes that would be?
Oh, gosh, there's so many of them. I'll tell you one that I just dealt with recently that killed the deal. Is the inspector, they did not use our inspector, and this one was displeased with the fact that on the attached garage, the door leading from the garage into the kitchen wasn't a fire door.
That killed the deal.
What does that mean?
There were a lot more things, but that didn't help. So what he was concerned about is carbon monoxide poisoning happens a lot when someone leaves their car running in the garage, right? If it's not a fire door, that could seep into the home and also cause someone carbon monoxide poisoning inside the home, not just inside the garage. If a fire starts in the garage, it could get into the home if it's not a fire door. I think it could get in because it's not a fire wall. Like, forget the door.
Yeah.
That's just me. But that's just an example. I don't know all the code things. There's hundreds. The width of the hallways, width of the doors,
The stairs.
stairs, all of
Railings,
these
bed
different.
stairs, yeah.
Right.
Okay.
I mean, railings are supposed to be here, right? Sometimes in old homes, they're here. Or not at all. Like maybe someone took them off. People do weird things to their houses. Yeah. Like I said, cosmetic things, we're not asking someone to remodel their kitchen so you can move in.
I have a question in terms of like a track record. of a house? Because I know we looked at one, so there was like a nice condo or something,
Mm-hmm.
and it would go to inspection, and then it was like 3 times people said it fell through on the inspection. Is there a way that you can see why a house failed inspection, or why these people are walking away from a place?
If
It's the same.
a prior transaction actually did get to the inspection phase, the listing agent has a duty by law to disclose to us why it fell through.
So you'd be able to tell before we even walked in, like Abby could say like this one failed because the foundation is crumbling.
Well, if they disclose that in the MLS,
Okay.
which they should, they don't always. So it's certainly the case most times when stuff like that happens where, for me, like I walk into a house and I'm like, well, that crack is pretty threatening. Why didn't you mention that? Well, we just really wanted you to see the house first. I'm like, oh, okay. You know, like in a perfect world, they'll let you know that before you even set up a time to see it. But, you know, those are harder to sell, and so you can't always fault them for, you know, not wanting to disclose it.
To the listing agent. However, if I'm a buyer and I purchase a house and I perform an inspection and I decide we didn't come to terms on the objection for whatever reason, it could be fire door, it could be foundation issue, it could be whatever. As a buyer, I don't have to give the inspection report to the listing agent. That's my property. So a lot of the times we do see that where, you know, either the listing agent's like, I can give you the objection if it's okay with my seller. However, I mean, we do run into that. So we can always make a call and figure out basically what's going to go on with the house. But you will always get the inspection. I never, hardly ever sell a house as for a buyer just as is, where you guys just never do an inspection.
And there are certainly those homes that are listed as we are selling this as is. When you see that, if you ever see that, all that means is they are not willing to fix anything. You should absolutely, I don't think any of us would ever advise that someone not get an inspection. Because what that can mean for you is maybe they're not willing to do anything, but maybe nothing needs to be done. Get an inspection and find out. And if something comes up and you're like, I'm walking away, that's okay. But yeah, inspections we find are the biggest deal killers right now because people move very quickly and they don't always think through, you know, what they might be getting into. Okay, any questions on this? Okay, so we will always recommend that you do inspections on the radon levels and on the sewer. Are you guys familiar with radon? Yes? Okay, cool. Okay, so what is a buyer's agent? In a transaction, you have the listing agent and the buyer's agent. The listing agent works with the seller, the buyer's agent works with you as the buyer. Your buyer's agent is just for you. They are supposed to be your personal coach, your advocate, your confidant, to navigate you through the process. We do have a fiduciary duty to the client, and that means that is the, I actually do have it written down because I can't remember these from real estate school all the time. It is the duty of obedience, loyalty, disclosure, confidentiality, accounting, and reasonable care. And reasonable care really doesn't ever come in unless something goes really south and you got to go to court. And that's really for a judge to decide if reasonable care was taken with things. I think that is one thing that sets our team apart, is we work very hard to make sure that our clients are advocated for and feel that way. Some of the conversations in the office are quite colorful. Mainly because of Abby.
Hey. You're right in there,
We will always provide our opinion if you want it. Really, it's up to you to decide, how do you want your agent to be with you? Do you want to know opinions on if it's a good price, or do you just want to go? Either way is totally fine. Very much up to you. But you need to be able to set that expectation. And confidentiality, as I mentioned, we won't discuss anything about you or the transaction with the seller or the listing agent that is not expected. We are here for you. And so if there is anything that is given away that might affect your buying power or your negotiating power, that's not something we will ever disclose. There is a moral and ethical responsibility to promote your best interests. We work exclusively with you, not with the seller in any way. A lot of people don't realize this, but in Colorado, it is typical for the seller to pay the commission for their agent and for the buyer's agent. So you don't pay us as a buyer's agent. That is predetermined in the listing of what that commission rate is. Typically in Colorado, it's 2.8%, but that can go up or down depending on a wide variety of factors. And then finally, a buyer's agency agreement is basically our working contract with you. It's the piece of paper that defines our relationship with our clients. Basically gives us the right and ability to represent you, to negotiate and write contracts on your behalf, and it also gives us the right to earn our paycheck. If we don't have that, it means we're working for free, and we don't do that. So I'm going to have Brandon talk a little bit about the loan process and all it entails.
Okay, well, pre-approval. The credit check and the initial interview basically is us getting an idea of your payment history and getting an idea of, your job, your income, what you want to do, how much you can afford, along those things. The loan application is something that takes about 20 minutes, and basically you're just going to provide, a lot of that stuff is done online now, so you can actually enter it yourself. And then it will just come into our system and it'll pop up automatically. The tax returns, typically, well, we don't, but we don't require tax returns because we can go to a service and get them, so you don't have to worry about saving the PDF and then emailing it to whoever. We have a service that will get that for us. So really all we need from you are the stuff that we can't get. Pay stubs, you're going to shop for homeowners insurance, and obviously the information about your address, your social security number, and all that kind of stuff. The loan estimate, what we call LE, after we have a full application, we provide that within 3 days. That basically gives you a breakdown of the loan amount, the rate, the payment, excuse me, how much your escrows are, and how much closing costs, prepaids, are all going to be for a total number that you're going to need to bring to closing. And that total number will be down payment plus closing costs plus prepaids and minus your earnest money, and that'll be your down payment. So just to give you an idea, prepaids, when you make a mortgage payment on January 1st, you're really paying for December, right? So you're paying everything in arrears. Prepaids is property taxes and homeowners insurance. You pay that in advance. So when you pay that on January 1st, you're paying for all of 2018 versus paying for all of 2017. So you pay for property tax in advance, you pay for homeowners insurance in advance. The government's going to get their money regardless, and so they want it now versus later. And so all those numbers, the HOI is something you could shop for, but the taxes are based on the county you're buying in and the amount of the purchase price of the house. Appraisal completion and docs review, basically, like I said, it's all about ability to repay. So they're going to assess your previous payment history, how you were paying on your bills up until this point. That usually is a good indicator of exactly how you're going to pay in the future. And then your ability to pay for the new purchase going forward with your job and the income that you have. Final ring, there's always a third round of docs, always. I hate to say it, but that's just the way it works. I hate asking for them when we have to, but it happens. And usually that's just updated versions, maybe the most recent pay stub, most recent bank statement, just things to update the file to make sure nothing's changed from the time of application to the time of closing. Loan approval, the closing disclosure, we call it a CD. That's issued 3 days prior to closing, and that will have all of your final numbers of what you need to bring to the table, all your closing costs, prepaids, payment, everything like that, in case something's changed in between. There's a small variance allowed between what you see in the beginning of the LE and what you see in the end of the CD, and it's limited to percentage points. And whatever is outside of that variance, we have to pay for. And then the closing, basically, it's all done electronically. We send everything electronic to the title company. You usually close at the title company. Our loan officers typically show up at the closing to make sure if you have any questions on the loan or loan type paperwork, they'll walk you through it. And then once you actually sign and everything gets recorded and the wire is transferred, they give you the keys that day at the closing table and you own a house. So it's a very quick explanation of something that takes about 2.5, 3 weeks over the time, usually.
What if there were to be some, like an increase in pay? What if you got a raise during that process?
Good.
Within that, like, third round of docs, would you have to then go back?
No.
And look back at everything else?
Decrease,
and
we'd have to go back.
Okay.
Increase, wouldn't do it.
Okay.
Would help. Because we're already going to qualify you on the income you're making now. So if you make more, it just makes you more qualified.
Okay.
Yeah. Raise is good. And for instance, things like down payment. So if you go at FHA, it's 3.5% down, but you can also get gift money. And so gift money is basically someone giving you the down payment. It could be a family member, and it could be, now they've changed it to a very close friend. You just have to be able to document your friendship, which is kind of a weird thing to say, but so in reality, you can get the down payment for your house, and then all you'd have to come up with at closing is the closing costs and prepaids. So one of the things that we do for first-time homebuyers a lot of times is that we will pay for some of the closing costs and the prepaids just to make it easier for you to come to the table with less money. Because not everybody has $15,000 laying around. Not that your closing costs $15,000, but it's an example. So sometimes we'll make an effort to help with that process and help pay some of the closing costs.
So with the gift, do you have to have documentation that it is a gift? Like,
Yes.
hey, Emma, this is a gift?
Well, there's a gift letter that
Okay.
is a form letter written up by HUD, the government, and then there's also you have to trace the money. So I'll need a bank statement from you showing the money went into your bank, and I'll need a bank statement from the person giving you the money showing it came out of their bank.
What's the amount of money that you need? That gift amount?
The gift amount can be anything up to 3.5%
No.
of the loan amount. So if it's $5,000 and you really need 10, that's fine. I mean, if it's 10 and they give you 10, that's fine too. You just need to trace it. So, and that's really meant more to prevent like money laundering and people, because a lot of times why they trace the money is so that the person who's giving it to you is truly a gift and they're not looking for ownership percentages in the house. And so later down the road there could be a title issue with liens and ownership. So a gift could be someone saying, all right, I'll give you 3.5%, but when you sell the house, I get 3.5% back. So that's why they call it gift. It's literally giving you the money with no intention to repay.
And that's 3.5% of the purchase price, not the closing costs, correct?
Yes.
Okay.
Loan amount.
Loan amount, yes.
Loan amount, yeah.
Okay.
Because purchase price loan amount are typically different.
Yeah.
And there's limitations on how much can be given. I mean, they can't give you a full 20% down, because then that really is kind of an equity stake in your house. So there are limitations. I believe conventional is 6% is the max down payment on conventional, and then FHA is 3.5%. So if you have parents that want to give you some money, that's easy to do. I don't have that luxury. I didn't when I bought my first house, but it would have been nice. So any questions?
Thank you.
Cool. So very last, but probably not, because like I said, this is a bullet point list, is who pays for what. And we already went through it a little bit, but the buyer is responsible for the title fees, which we already went over the closing fee, which you can do 50-50, the lender's coverage, and a bunch of other things. And I will be very honest with you, I don't know what all of them are. Because the title company's like, you have to pay for this. You say, okay, great, thank you, I will. Okay. Your loan fees are, your credit report and processing the underwriting, the appraisal, the interest on the loan, first year of homeowner's insurance, et cetera, et cetera, et cetera. Your prorations. This is stuff like they want you to put 2 months in an escrow account for property taxes, 2 months for homeowners insurance, any of your upfront HOA dues, and other prorations would include like water. I know for me, they're paid at the end of the year. So if I were to sell, I would pay up until the point where I sold the home, and the buyer would pay for the rest of the year. Same goes for, I already said taxes, HOA, what's something else?
Those are the big ones.
Great. Nailed it. And then other fees are something like the home inspection, any other inspection that you want done. Some people in an older home might ask for an asbestos inspection or an asbestos test, or if you're a really old home, a lead-based paint test, stuff like that. For the seller, like I already said, they cover,
Sorry, can you back up just for a second?
yeah,
Some of those fees, like inspection and appraisal, are usually things you have to pay for up front.
yes, thank you.
The other things you pay at closing as part of your closing costs. So,
Correct.
What's
so
the typical inspection amount?
It really depends on the size of the home. Generally, we'd say $350 to $500. Now, obviously, if you're buying 5,000 square foot house, I mean, it's going to get a little higher up there, but you know, and that's just how long it takes, because an inspector will go through every inch of that house, and if it's a bigger house, it's going to take them longer, or her longer. We don't
an
discriminate.
appraisal could be 500 to 800. Most lenders will require you to pay for that at the time. There are some lenders that will throw it in closing costs.
We do it both ways,
Okay.
whichever's easier.
So is there a benefit to one way or the other?
This is whether you have an extra $800.
Thank you. Okay, so for the seller's commissions is what they pay for. They pay for the title insurance premium, and that's basically, I went over what title is, and just making sure that anything that they found or didn't find in that title commitment, showing that there's nothing wrong with it, no one else owns the property, there are no liens on it, they're guaranteeing that for a certain period of time. We went over the HOA dues and taxes for the time that they lived in the home. And then, of course, there are some other little things on their closing side of it, but you don't need to know that. So those are the bare bones. Obviously, every transaction is very different, and yours is going to look a lot different than each other's even. So ask questions frequently, and if you have any now, we will all answer them.
Are the steps pretty similar for a short sale home? Or a little different? I don't really know what it is.
Sure. A short sale, and correct me if I'm wrong, I've never worked on one, it's owned by the bank. It's not owned by the bank.
Isn't it when you're going to sell your home, but you paid more than what your home's worth? Like
Bill's
more-
gonna
You owe
tell
more
us.
than what- You owe more than what you can sell the house for.
So like if
Just
I own the
try to
house
get
for $400,000, but value is only $350 for whatever reason, as a seller, I would be having to bring $50,000 to the closing in order to close on the deal. If you guys decide to give me full listing price.
In Denver, it's very rare.
Okay.
Right, at least in the last couple of years and for the foreseeable future, it's rare to see a short sale anymore because appreciation has been so strong.
I'm from Kansas, so I used to sell a lot of short sales. I don't think I've ever even shown a short sale here. Granted, I've only been here since the summer, but overall, more than likely, especially like, I'll just talk way back in Kansas, whenever I would show a short sale, the house foreclosed back in 2008, 2010, and it's been vacant, and there's structural issues for investors, or even like, I'm not touching it. I can't really speak for here, but from what I understand nationwide, right now, it's probably best for you guys to just go ahead and not buy a short sale, and I am the realtor that will just be really honest, my opinion. I would buy a short sale, so I don't think I would sell a short sale. And if you guys want to buy a short sale, I personally probably would refer you to somebody that is more informative of other sources in the term.
Other questions?
They can sometimes take longer, especially short sales, yeah, foreclosures, which foreclosures, you know, a lot of people, well, what about foreclosures? In Denver, you just don't see that many as well. There's certainly them out there. A lot of them are completely trashed to the side. Some of them are just fine, and you're like, okay, why is this a foreclosure? But if you're in a hurry to get into a house, foreclosure is not the way to go. You're at the complete mercy of the bank, and they don't work on any timeline except their own, and they don't communicate. So it could be 6 months before you can close on a foreclosure. So there's pros and cons. You might get a deal, but in the Denver market, they're just a rare thing. You just don't see it very often.
Thanks.
Sure.
Anything else?
Say I come to you and I want to buy a home. I'm doing all the things that I should be doing in the home buying process. I have a good down payment. My job history is good. My credit is good. I have the pre-approval thing done. Generally, like with the market right now, how long does it take you to sell a home?
Homes under, let's call it 450, 500,000 move a lot quicker than homes over a certain price point, simply because there are more people looking for those. So under a certain price point, I would tell someone, if you need to be out of your apartment or current home by, let's call it the end of June, we want you under contract by the end of May, which means you want to start looking at least 2 to 3 months ahead of time. Because inevitably, and this might be just my personal opinion and my experience, so please feel free to chime in if you feel differently. I think that a lot of buyers go in saying, these are my must-haves, and then reality sets in, either because they realize that that's not realistic with their budget and location, or because they're like, actually, I don't really need a ranch, or I don't really need a finished basement, which is what I was looking for. Also, I think a lot of people, when they start kind of thinking about looking, they start looking online at, Zillow, Realtor.com and such. They see these beautiful photos. Photos lie. They just do. I can't tell you how many times the buyer will go into a home and they're like, oh my God, the photos looked so nice. I'm like, yeah, but they're not scratch and sniff. And I mean, it looks very different. And you start to be able to pick up on that a little bit in a photo. If it's super, super photoshopped, you're like, oh, why? And so kind of weeding that out and setting your expectations correct, I think it could take a week, 2, 3, a month even. And then I think you're really able to get serious. And then it's just a matter of finding what you love in your budget and going under contract. And that third thing I think is the hardest, depending on what you're looking for. That answer your question? Okay.
I would say, just to follow up with what she said, the escrow period, that time from when you go under contract to when you close, that's another piece. That typically is 30 days. Sometimes it can be 45 days, but most of the time it's 30. Some lenders can do it quicker, depends on how organized you are with all your documents and how much you've done ahead of time. So if you all think 30 days, that's a pretty average time frame for how long it goes from being under contract to closing. Now, I don't think you mentioned this, but when you close on a house, say you close today, November 17th, 15th, your first payment is not going to be until January 1. So those people who are renting currently, you're gonna not have a house payment for December because you're paying all that interest at closing. And so remember that when you're thinking, oh, I'm going to have a rent payment and a mortgage payment for December. That's not true. Correct me if I'm wrong.
Sure.
When is that Like
cutoff?
November 1 or November 2, are you still gonna close December, or first payment still January?
It depends. You can do it two ways. You can do full 30 days of interest at closing, and your payment's January 1st. Or you can do what's, less days of interest per diem, and you pay December 1st. So it really is a choice. You can be done either way. Typically, you do full 30 days of interest and pay, and close, and your first payment is January 1st. Typically. But you do have the choice if you chose to do less money at closing and prepaid days of interest and have it paid on December 1st.
So make sure you ask that question when you're dealing with your lender. Because that could be it could be a benefit. Because that means you're not paying rent and a mortgage payment if you're trying to get out.
And one's not necessarily better than the other, just what your financial situation
Yes.
is?
Correct. Yeah. Just something to be aware of.
A lot of people like the idea of having no month payment.
Yeah.
But don't
Especially if you're trying to
kid
save for a
yourself.
washer dryer or
Yeah.
whatever.
And it's like, how long can I actually put that off for?
But don't kid yourself. You're not getting anything free.
Right.
Exactly.
They will get their interest. You're just paying it either upfront or later. So.
Yeah.
I will say for first-time home buyers, most of you, especially if you haven't even gone to an open house, which I don't know about you guys, you probably don't know exactly what you want. And I will say that Ryan and I had a client very recently, which I met 4 months ago, where they're like, we want this beautiful 2-story with a white picket fence, and I could totally find it for them. And I found them a couple of 2 stories of white picket fence, and they're like, this is so cookie cutter. This is not exactly what we want. This is horrible. I don't want this. The lot's terrible. I don't want this big yard. All sorts of stuff. We completely understand that. You don't have to know what you want the first couple of houses that we see. And we are trained to kind of know and ask the right questions to find what you guys want. And then once we find it, we can set up an offer and make sure that you guys can.
But by the 5th house, if you don't have it figured out,
That's Katie's night.
you're fired. Just kidding. Any other questions?
Is there any legal differences in terms of like paying for mortgage for a property on ground as opposed to like getting it in a building? Or what's like
So-
when you sell it?
In terms of like a single family home versus a townhome or condo?
Yeah, so like in a building, yeah.
Sure. With the loan, and I might let you take this one, there are things that matter depending on how many units in a building are renter occupied, but I'm gonna let you take that on.
That's really there's only 2 types of properties in high-rise condos that are tough to do. One's called a non-mortgable condo. And that's what she's talking about, where there are more people in the building that are renting or that are owned by corporations that are renting it out than people who own it as a primary residence. The next thing is a condo-tel, which is basically the condos that are above a hotel, like the Ritz-Carlton residences or condo-tels. And so that's really what we do. But if you find a condo downtown where it's a warmable condo, which means more people live there as a primary, there's no difference. There's additional documentation that title will have to get, but you know.
Is that typical of a lot of condos, or is that kind of?
You find non-wardable and condo-tels a lot more common in the mountains because they're more resort towns.
Sure.
Downtown Denver, you really don't see that many non-wardables. For the most part, they kind of limit it. The HOA Association knows that people have a hard time getting a loan on non-wardables, so they try to prevent it.
Okay.
So you're not going to find too many non-warrantable condos downtown. Cool. Yeah. Well, at Cherry Creek, there's virtually none.
No.
Yeah, they're all warrantable, just because they know that it's difficult to get a loan.
Yeah.
You know, you have to have a very qualified person because you don't get as high LTV on non-warrantable condo. You have a lot of money to put down. So
Sure.
they're trying to put down.
And typically you do have to have a little bit higher down payment to do a non-warrantable, and there are very few lenders who will do that.
Yeah, they're tough to do. It can be done, but you have to have really good credit and have a lot of money. And we were doing a loan for a guy in Breckenridge. It was an $800,000 non-warrantable condo, and he couldn't get a loan for more than 70%, and he was worth about $600. It's just the profit. It's not the borrower, it's the profit. So.
Well, does that answer your question? Any others?
I have one last one. So, if say you were talking about like your dream house, and I know it's like a hot commodity type thing. Say if it's your dream house and it's a $300,000 house and you want it so badly you'll say 310, and then the assessment happens and they say it's 290.
Sure.
What would happen with that? Would you just say?
Well,
you talked about it, I think.
it's hard to say for sure because that's a negotiation that would have to happen between you and your agent and the seller and their agent. In a perfect world, they would come down to 290 because realistically, that's all your lender is going to loan you now. That's what it has appraised for. If you have the extra 30,000, extra 20, extra 10,000 to bring, and you can come to terms somewhere in the middle, that's fine. But you have to be the one who has that extra cash to make that up.
Okay.
So if that were to happen and you don't have that cash and they're not willing to come down to 290, likely the deal would terminate. It's also worth mentioning, and I didn't put it in here because I think it's kind of scary, and I'm not looking to scare anyone. There are several outs a buyer has in the transaction. And that's the inspection objection, the appraisal, the HOA documents, if there are any. If you can't find, thank you, homeowner's insurance that is acceptable to you.
Financing.
And finally is your loan objection. Yes. So those are your big 5 outs that you have. Kind of in that, mostly in that order. So keep those in mind. And those are, and what that means is those are outs where you still get your earnest money back. Now, you're past your loan objection, which means all your documents are in and your lender's telling you you are good to go, you're clear to close, and you get to that closing day and you say, just kidding, I'm out. You lose your earnest money. All of your outs are gone. And yes, that does happen. Not a lot.
Is it difficult to find home insurance?
No.
Okay.
No. The only one that I've had where it's been a little difficult was a mountain property, and that's just because, fire danger and trees, and it costs more unless you want to remove the trees. Removing the trees costs more, and so that can be a little hairy, but typically no.
We had,
You're fine.
we had one recently that the house had water damage, and so the homeowner's insurance, instead of being say $100, was $190, and it caused the borrower not to qualify. So things like that.
Other questions?
Going off of his question, from your experience, how often is it that you'll be in a situation where appraisal is under asking price? Comes under asking price?
I haven't had that happen for real.
Okay.
How often does that happen to you though?
I've only maybe 5 times in my 5 years. I will tell you, in the springtime, which is our hottest, springtime is the craziest time of year to buy a house. It's also the best time because there's a lot more inventory. But you're up against a lot of other people. And so there's going to be times you might like the house, but so do 10 other people. And you might be forced to pay over asking price. And the listing agent might come to you and say, I want to guarantee that if we're 10,000 under in appraisal, that you're going to bring that amount to closing. So there might be a time when you, in order for you to get the house, if you have the ability, you're going to have to bring that extra money, and you're going to have that agreement when you go under contract, not when you get to appraisal. Because the seller doesn't want everything to crash because you can't come to an agreement when an appraisal comes in, because they have all these other buyers that are also looking at this house. So that's another thing that your agent's going to walk you through. If you're looking at a house that is very popular and a lot of other people want it, and you really want it, and you have some extra cash, it might be something that you put in the offer that says, I will guarantee that I will bring 10,000 extra in cash if the appraisal comes in 10,000 lower, or something to that effect.
From a financing point of view, that's on top of everything else. That's on top of
Exactly.
the down payment, that's on top of the purchase cost, that's it, up and above and beyond.
So say you do that and there's 10 other people that do the same thing. Can they make the seller and the buyer make the agreement with multiple other people?
No.
And then they choose, so they can only make the agreement
Well,
with one of the?
You can have that same kind of written up thing in multiple people's offers.
Uh-huh.
But once they choose your offer and they sign it, then they're working with you. For a seller, it's very hard to get out of the contract. A buyer, as Katie said, there's many different outs that a buyer has throughout the process. But a seller, it's very difficult. What's that one for that?
It's that whole big.
We don't want
It
to
is that
scare
way.
you guys by any means. And,
No.
I mean, I personally, if you love the house, it's your dream house, you absolutely have to have a house where you're willing to pay $10,000.
Is this the Keller Williams?
Over.
Yes. So sorry, I'm a little cutting you.
You're fine.
Is it okay to still come in?
Yeah,
Okay. Sorry.
And if you're willing to pay over asking price on top of your down payment, I'm going to probably advise you to say, let's find another property, you can find another one, but if you really want it, we'll go with it. But like Katie said, you put 13 offers on a house. I would say my average first-time home buyer probably puts 6 or 7.
You're in a
this
very
market,
popular place.
we are. So, and I will tell you that everything happens for a reason. If you don't get your dream house, I will eventually get better. And I always have.
And we all have creative ways to try to get your offer to be more appealing to someone else. Like Katie said, there might be a time when a seller likes you because maybe you wrote a letter to the seller and just said, hey, I'm a first-time home buyer. I want to start a family. I want to get married, and I want this house to be our first house. And these are the reasons why I love your house. That's a very popular tactic that I've used to a lot of success because it goes. You want to tug at the seller's heartstrings, and you're going to say, okay, what can I do to make them like my offer, even though it might not be the very best offer there is. And we will all coach you on doing that. If it's appropriate, if it's not appropriate, most of the time it is. Especially if you have a story to tell. Yeah.
What other questions can we answer?
Thank you, Katie.
Thank you, Bryce.